Good morning, 4:52. Time to check in with the markets now. Scott Shellady joining us. Good morning, Scott.
Good morning.
High anxiety when it comes to world markets. How are we doing for ag commodity markets this morning?
Well, we're a little bit better. Both corn and wheat are up about 4 cents. Beans about 1 to 2. So we've clawed back, or at least kind of stabilized after yesterday's wild ride.
Boy, I guess. The fact that corn and wheat came back, soybeans not so much. What can you read between the lines regarding that?
Well, I think the beans look pretty good, and I think that's been the chatter as of late. They came off, at one point yesterday morning we opened up about 30 to 35 cents lower, so they did come back about 20 some odd cents, but still I think that good weather and a decent crop are still weighing on them, so they had a hard time getting their feet. Again, today we're up 1 to 2 cents, but I think that because of the way the crop looks and the decent weather we've had as of late, those things, the longs really had to, they were running for the doors.
The world wants our soybeans. The world wants our wheat. But the dollar down and the world economy seems like it's imploding slightly. Is this a concern at all?
Yes, it should be. And I think that what the listeners need to know is yesterday we kind of came unhinged, and it's telling us a bigger story. And, when you've got the rate hike rhetoric on the table, that was strengthening the dollar all the while we thought we were going to hike rates. Well, looks like that's been pushed off because of market turmoil. So the dollar actually lost a lot of value yesterday against other currencies in the basket, and that would always normally give commodities a big boost. But yesterday we saw the dollar down and commodities across the board, across the world down, which is telling me, and I think it told other investors, and this is why the markets were kind of spooked, is that it looks as though we're walking into a global slowdown. So that's something we have to be worried about. Again, China's stock market was off 7.5% overnight, which is massive. So we have to worry about them slowing down because ultimately they're 30 to 40% of the world GDP. And if they're really having troubles like we think they are, that we can't. There's nowhere to hide, and there's no economy that's strong enough to be able to handle or at least help them out of their troubles.
All right. So in the meantime, what should farmers be doing as far as a marketing plan ahead of fall harvest?
Well, I think I'd be a seller of rallies. I think that globally commodities are still going to struggle, even if the dollar does get weaker, because of this unhinged scenario where we've got a large part of our global GDP struggling. And they're not telling us how much they're struggling because China's been that way. Mm-hmm. But if you've got it to go and there's some left in the bin and we do get a little bit of a rally here, make sure you're locked and loaded because I think you want to take advantage of those opportunities.
All right.
Oil still can't find, oil can't find its feet. No commodity really can find its feet.
Well, Scott Shellady, TJM Investments Senior VP. Thank you so much, Scott, for the reality check. Have a good day in the markets if you can.
All right, good luck.
All right, thank you. All right, it's 5 before 5 coming up next. Check at the forecast and a preview of what's coming up next on the Valley Today.